Hello and welcome to the first video that I've created. This will be a take up to exercise 17 that you guys have done in class. This file doesn't mark itself, so I figured it'd be a good idea to take it up and see, clarify some common mistakes that you guys might have made while you were doing this exercise. So to start us off, we're going to be in the general journal as always. If you make a mistake here, it'll carry through to your ledger accounts, trial balance, and etc. So I want to make sure that we get all of our accounts correct right here. So starting off, we have what we've seen always is a cash investment into the company, right? So we're going to debit cash and credit capital. And we've done this for everything we've seen so far. We're also going to put source J1 here in the description so that later on it'll help us show up when we start posting to the ledger accounts. And we know it's source J1 from the left-hand side right here. So moving on, we have that we received a bill for $750 from the Gazette for advertising. So we would debit the advertising expense and we would credit the accounts payable because we got a bill that's due in 30 days. We haven't paid it yet. So again, we would put the source right underneath it, leave a space. Next up, we've got the equipment, right, that we bought using $500 cash and the remaining $1,500 to be paid in 30 days. So we would debit the equipment because we got it and credit both cash and accounts payable because we paid partly in cash and we still owe a partial amount later on. Next up, we have that we paid the player's salary for $22,500, so pretty straightforward. Debit the salary expense, credit the cash because we paid for it. Next up, this was a little bit confusing. I got some questions on this. It says that we produced a gate receipt of this much parking revenue, this much concession revenue, this much. So even though it doesn't say so, the gate receipt is also a source of revenue, right? The other two are pretty obvious because they say revenue right there in the account names. But the gate receipt is also revenue because that's kind of showing us how much money we got selling tickets. So we would credit the cash because we physically got cash from all these revenues. So we credit the revenue, debit the cash, and we move on. Next up, we have the bank loan right here. Oh, sorry, I skipped one. So we skipped this one actually because it was a little bit of a trick question because we signed this contract with the player, but we haven't paid them yet. So no financial transaction has occurred. Therefore, we don't write anything into our journals. So when we do pay him, we will put it in the journals, which is why kind of the source was contract and not an actual journal entry, right? Unlike all of these. So we would actually skip this and move on to when we make the next transaction where we made a monthly payment to the bank loan, which consisted of this much money in interest and this much money to actually reducing the loan. This one was also a little bit confusing. I got some questions, and that's because we aren't paying $1,000 in the loan, right? We're only paying 900 to the loan. We paid $1,000 total, which is why we credit the cash for 1,000, but only 900 went to the loan, while the other 100 went towards the interest expense that was charged on top of the loan this month, right? So we paid 1,000 total, but only 900 went to the loan. Moving on, we have another situation where we got money from, selling tickets, selling food, paying for parking, etc. So I won't go over this. Next, we have the rent expense, right? That's calculated from 10% of the gate receipt. So a little bit of math over here. The rent expense would just be 10% of the gate receipt. So we total up this gate receipt plus this gate receipt multiplied by 10%, you'll get $840. So that's what our rent expense is. And our cash would be credited because we paid it out. Next up, we have that the owner withdrew $700 to make a monthly payment on their car loan. Also, so this one was also a little bit tricky because when the owner withdraws money, right, we have a specific account for it called drawings. You can't just debit the capital account because that doesn't exist. You have to debit the drawings, which is what's called a contra account to capital, meaning it's pretty much the opposite. So we would debit the drawings, we wouldn't debit capitals directly, and we would credit cash because we lost that much cash, right? The owner took it out. We wouldn't count this as paying a loan because this payment that the owner did was her own personal payment, right? Not for the company. Therefore, we wouldn't say that, we paid off a company loan like over here. So lastly, we have receiving a bill for the transit, and we would simply debit the transportation expense and credit cash. Oh, sorry, a little bit of clarification here. We did receive a bill, which might indicate that it's an accounts payable, but it says in here that we sent a check in for the payment. So it actually means we've already paid for it, and the check does count as a cash payment. So there you go. There's all the journals. Um, Overall, the titles and stuff are still the same. While I was walking around, I noticed that some people were writing the payments, sorry, the PR, the postings, while they were doing this page. Keep in mind that you're not supposed to do that. This is actually automatically filled when you do the postings in the ledger accounts, right? So don't do this when you're doing the journal. Do it when you're at the ledger account. Speaking of, we're now moving on to ledger account. And a very common mistake that people I've seen make is that they forget to do this balance forward row for their accounts that do have a starting balance from, say, last month. You can check that from the starting balances tab right here. For this specific case, we only have cash and bank loan. So we do have to put them in as a balance forward before we start writing down our transactions from the journals. So for the cash, we would write 10,000 right here in the balance, and we would not put 10,000 in the debit column. This column is only for transactions that occurred, right? So it's not, the starting balance wasn't a transaction. This was just information that we got from last month. So we wouldn't put anything here. We would put DR for debit because this is a debit amount, right? We have positive $10,000. And again, this column isn't for the transaction, it is for this running balance. So just because you have a credit for cash right here, for example, this would still stay debit because your total balance right here is still a debit balance. So anyways, moving on, this is pretty straightforward. All of your journals show up conveniently over here for you guys, and you would just put them in one at a time, right? You would start with cash, write them in right here. You would actually try to fill out the particulars for this answer key. It's not filled out, but you would simply write a few word description. So for example, this first uh, transaction, it was just like an investment from the owner. So you can just write investment, right? Just a few words would do as long as you fill it in. Then you would work on, if it's a debit or credit. So in this case, it was a debit of $25,000. You would write it down here. You would now add 10,000 to 25,000 to get 35,000 as your total running balance. Then this is a debit amount. You would write DR. Finally, when you're done all that, you would type J1 in the postings because that's where you got it from. And that's why it was important right here to put in the descriptions where you got the source from, just so it would show up right here. If you didn't do that, it wouldn't show up and you'd have to kind of go back and forth between pages, which might be a little annoying. So we have J1 right here. And once you finish the posting on your ledger account, you would actually go over to this side of the column, which a lot of you forgot to do when I was marking. And you would type also the account number for the cash. Right? For cash, it's always 100. But if you forget, handy way to find out what account number is to also go back to the starting balances and look at this column right here. Usually lists all the account numbers for you, so you don't even have to memorize them, right? You just go back to ledger account, fill these in with the correct account numbers, and the accounts are also in order from the account numbers from least to greatest. So, no memorization there necessary. It's everything's in the starting balance. The only thing so yeah, this whole page, pretty straightforward. You already have all your transactions. Just post them in the right accounts, put them in the right debit credit and make sure that your running balance is updated and that this column right here is telling us if the balance is debit or credit, not if the transaction is debit or credit, right? And also make sure to fill in the descriptions and do the postings back and forth, right? Don't forget to do the postings on this left-hand side here, because once you fill this in, it'll update over here for you. That's about it for the ledger. Nothing new here because if your journals are correct, your ledger is probably correct as well. So just make sure you have the right numbers. And we're going to move on to the trial balance. So trial balance, also pretty straightforward, right? It seems like if you get the journal correct, you're pretty much set up for success, right? So for the trial balance, again, the accounts are listed in order from the account number, and you can find that in the starting balance. So again, no memorization. These entries are just directly from the totals of your ledger accounts, right? And that's why it's kind of useful to have a running balance. So you can just kind of put information from the ledger account into the trial balance using a formula if you wish. Just make sure you have the correct debit and credit uh, in the right columns. I see a few people putting drawings in the credit column by accident, right? Just remember that drawings is a debit. And don't forget your total at the end. That's about it for the trial balance. Hopefully, your debit and credit do balance. If they don't, you definitely did something wrong and you might want to double check your work. Next up, income statement. Again, everything here you should be able to get from your ledger account or your trial balance, right? So these are directly from, you can probably just go find it in your trial balance. And you just have to make sure that you actually use the correct revenue accounts and the correct expense accounts. Total them up using a formula and find either the net income or net loss. And if it is a net loss, make sure that you do type net loss and not use net income. And you write a negative so that it shows up in brackets. That's about it for the income statement. Now moving on to the balance sheet. This was a fairly lackluster example, right? There's only sort of one current asset, fixed asset, current liability, long-term liability. There might be more for future examples, but for this one, there's really only one of each. So we don't really need a total current assets row. But if there were more, you would need that. Also, if you wrote total current assets, it wouldn't be incorrect, but you probably don't have enough room to do that for this example. So also, again, make sure that your current asset is actually current and your fixed is actually fixed. So make sure these accounts are in the right categories. And these numbers can be just taken directly from the trial balance again, and total them up correctly, right? And make sure you don't do any silly math mistakes. Don't forget the owner's equity to less net loss if you have a net loss, right? Don't say add net loss or add net income. You have to say less if it's a net loss, and you have to say add if it's a net income. You also have to use less drawings, and this comes after your net loss or net income. And this will always be less because drawings are by definition, right, a negative. You're subtracting from the capital because you're taking money out. Calculate all the totals, make sure they balance, right? And yeah, that's about it for taking up this example. Honestly, everything was in the journal. If you have the journal correct, I'm sure you did everything else perfectly. If not, minus some silly mistakes. So that is it for the take up